This is Ag Matters PM from the Iowa Agribusiness Radio Network, brought to you by the Iowa Soybean Association, your source for the latest Iowa ag news headlines right here in the heart of the heartland. With reports from our award-winning team of Dustin Hoffman, Riley Smith, Mark Magnuson, and Andy Peterson. Now, from the IARN studios in Des Moines, here's Dustin.
Hello, everyone, and welcome to Ag Matters PM from the Iowa Agribusiness Radio Network. I'm Dustin Huffman. Today's Tuesday, the 13th of May, 2025. We're so glad you could join us here today. Coming up a little later on in the program, we'll talk with Ross Baldwin of agmarket.net to find out what happened in those closing markets. But first, while out in Washington, D.C., I had the chance to stop by the office of Iowa Senator Joni Ernst. We had the chance to talk about a lot of agricultural topics, but of course, top of mind was the Farm Bill. Now, of course, we know that it's on its second extension of a year and is supposed to be fixed by September 30th of this year. Now, we've heard reports that may not happen, and that's why many members of Congress are looking to use the reconciliation bill to get some of the more urgent needs met. Now, we also talked about nutrition and food security provinces in the Farm Bill, and I asked the senator, first of all, is using reconciliation going to be a help or hindrance when it finally comes down to getting the biggest piece of ag legislation done?
Be both, Dustin.
Okay.
So, yes, and I've been floating this idea with a lot of different farm groups, and we've been discussing the need to change the reference prices. I mean, this has been an issue for quite a while now, and the reason so many of the farmers and ag groups push back against just the one-year extensions that we've continued to do. Reference prices in the Farm Bill haven't been updated since 2014, and that was based on 2012 data. So those reference prices are really low, and we know it doesn't meet the needs of farmers today. So if at all possible, we are preparing an avenue to do reference price updates in reconciliation. There is concern if we do reference prices and reconciliation, maybe we don't get the Farm Bill done. But what I will say is there's still a lot of this going on about the Farm Bill. Mm-hmm. You know, Chairwoman Stabenow in the last Congress, she missed an opportunity to get the Farm Bill done. We could have come together, but we didn't. We see that same type of stuff going on now with Chairman John Bozeman. He's doing his best to bring all of the different groups together, but there's a lot of argument. People want to keep SNAP where it was when it was boosted during COVID. We don't have the same challenges that we did as we saw during COVID. I don't know why we keep operating off of that same model. We need to go back to where it was pre-COVID. So we need to work together on this. But unfortunately, if that doesn't happen, if we can't come to the table, we have to support our farmers. And we need to do that by raising reference prices. And if we can get it done in reconciliation, I think some of it getting done in reconciliation is a good thing. And then we can continue working on the Farm Bill. But I know there's a lot of disagreement out there, but bottom line, we've got to keep our farmers in business. And if we don't do something about reference prices, I worry about what their future looks like.
And one follow-up to that, I know there's also a lot of concern about the futures of like things like the Iowa Food Bank or Meals on Wheels. And those
Absolutely.
are programs that rural and urban people both use. I know when they did some funding cuts in the beginning of the year, Iowa Food Bank told us that put 15 truckloads of food in jeopardy right off the bat.
Yeah.
What can we do to assure that the things that are needed are still there? We know you have to sometimes rob Peter to play Paul, but how do you help the people that are truly needing these programs and depend on these programs?
Yeah, and it is important. And so part of that push is to just bring food prices down, period. And that means the energy sector, we've got to focus on the energy sector and make sure that we're delivering energy as cheaply as possible. We can do that through this administration, whether it's permitting reform, allowing greater investment in nuclear technologies, wind, solar is all big in Iowa. But even in the petroleum space or natural gas space, we've had pushback from the previous administration. Energy costs drive food production costs up. So bottom line, lowering energy costs, and then going back to things like Proposition 12. All it did was raise the price of food for everyone else. When we look at egg costs, making sure that we're combating HPAI and bringing down the cost of production for eggs. So there's so many factors involved out there, but President Trump, he's taking a holistic approach. So making sure that we're driving down those costs and then it's more affordable and we can get those 15 additional food trucks that can make deliveries out to the food banks across Iowa. It is something that we are concerned about. It is something that we are watching. We're actively engaging with the administration to make sure that people that are food insecure are able to get what they need. But bottom line, we've all got to work together on this. And when you just simply refuse to come to the table and talk with us about it, that's not the solution. So we'll continue working with the Trump administration. We can have visits with them all the time. You know, I spoke to the president on Sunday night. He called me late and we had a great discussion about some of these farm bill issues. So he's ready and willing to talk. We just need the other side to come to the table and talk with us.
All right. That again was Iowa Senator Joni Ernst talking about the Farm Bill, reconciliation, and some of the titles that are in the Farm Bill that need to be addressed sooner rather than later. We're going to take a short break and hear from our sponsor, the Iowa Soybean Association and the Soy Checkoff. When we come back, we'll talk with Ross Baldwin of agmarket.net to run down the closing numbers. This is Ag Matters PM.
Iowa Soybean Association is driven to deliver for Iowa's 40,000 soybean farmers. We're proud to provide objective agronomic research, a helping hand with soil and water stewardship, and timely industry news powered by the Soybean Checkoff. Learn more at iasoybeans.com.
It's time now for the Ag Matters PM Closing Market Summary, your source for market analysis and settlement prices from the day's trade in Chicago, courtesy of the folks at agmarket.net. Well, we're back on Ag Matters PM here on the Iowa Agribusiness Radio Network, and time to run down the closing markets with Ross Baldwin of agmarket.net. Ross, what did we see come up on this Tuesday?
We saw another day of selling across the corn market on the heels of that friendly WASDE report here yesterday on Monday. And it's just been the theme here over the last few weeks as the funds have covered this long position they had in corn, and it appears right now that they're building into a short position in the corn market. And I would say it's a little surprising to, you know, quite a few people across the market, just given the amount of pressure that's been on this market, given the structure and the by structure, I mean the fundamentals of the corn market. So the corn market itself got the friendly report yesterday. We initially traded 8 cents higher, ended the day lower, and today we found more selling. July corn ended the day 5.5 cents lower. Dees corn was 4.5 cents lower. We did see more pressure on the July Dees corn spread, which is that spread has just collapsed here over the last few weeks. And actually, at one point today, the July Dees was trading at a carry. You got out to 2 3/4 cent carry, I believe. We ended the day back at a penny and a half inverse, but it's been a rough go across the corn market. Over in the soybean market, beans were 1 to 2 cents lower, and the wheat market actually did close green on the day after making new contract lows. Chicago wheat closed 2 cents higher. Kansas City wheat was 3 to 4 cents higher. Actually, not a bad look for the wheat market to make new contract lows, and we closed over 10 cents off of those lows. So it was a constructive day, I would say, for the wheat market, but that market remains extremely ugly as well.
And when we talk about extremely ugly in the wheat market, because we know it does have a lot of effect elsewhere, I mean, what's going on that's really causing the ugliness?
Yeah, the wheat market, there's no shortage of wheat supplies around the globe, and especially in the U.S. And we got to see that yesterday, where most of the wheat numbers all came in above the average trade guesses, and that the wheat has just been weighing on the corn market also. And you continue to see that, where corn got a friendly number yesterday, where the old crop carryout got trimmed down to a little over 1.4 billion bushels. It's actually at 1415, and we saw that drop 50 million bushels. A lot of that's largely due to increased exports, and the new crop balance sheet was the highlight of the corn market. Came in 200 million bushels below the average trade guesses, and the USDA's got us essentially starting the new crop growing season with a 1.8 billion bushel carryout, and that's using a 181 yield. So the corn market itself has some friendly fundamentals. I think we just got to get through this fun selling right now. And even over in the soybean market, soybeans, they've got I would say friendly numbers. We don't have a ton of bean acres that are going to be in the US, and the carryouts around projected for the new crop carryout around 295 million bushels. So there's just no room for error when you're starting at a 1.8 and a 295. But I think a lot of this, it does go back to the negativity that we've seen in the wheat market from abundance of supplies globally and the pressure that's created on the rest of the markets.
All right, switching over to the livestock side of things, it was a good day yesterday. All the markets were up. Cattle was way up, really had a good day. Did that carry through to today? What did we see in cattle and hogs?
We did see it carry through today in cattle. It was an extremely quiet day in cattle, and it's not something that we've seen here lately is a quiet day in cattle. But June live cattle, they traded higher for a little while this morning and ended up ending the day 50 cents lower. The August contract was unchanged. August, October unchanged. The far out deferred contracts, June, August, October, they were all around $1 higher. But there really is not a whole lot going on here today to look at these markets in the cattle. But over in the feeder cattle market, the nearby contracts were 25 to 40 cents lower. The back months, they were a little bit higher also, 50 to 60 cents higher. But like you said, the cattle markets have been on a tear here lately. We've seen cash fats, cash feeders both set new all-time highs. Last week, cash trade in the fat cattle market was a lot of it was around 223 to 225, 355 to 360 dressed. So these are new all-time record highs. The Packers have been able to get quite a few cattle around the last couple of weeks. They have been reducing slaughter. So I think a lot of people are, and myself included, really interested to see how cash can perform this week if the Packers are finally able to maybe slow the reins up on this cash market. Given the last couple of weeks, they've had strong purchases, and with these lighter slaughters, and this week's expected to be probably the fourth week in a row that we'll see a sub 560 kill for the week. And at some point, it sure seems like the Packers are just trying to build enough inventory to where maybe this cash market does slow down. But the cattle market obviously got some bullish news over the weekend when the USDA announced on Sunday afternoon that they were closing the Mexican border again for feeder cattle due to more cases of the New World screwworm down in the southeastern part of Mexico. So with those imports, those imports were just getting ramped back up to normal levels. I would say back up to that 100,000 head a month. And so with the border getting closed back down, it's bullish feeder cattle. But I would say, I mean, the thing to watch with this cattle market is we continue to make new contract highs every day, and there's no question the cattle market's overbought. We're pricing in no shortage of bullish news, and people need to be mindful of a reversal or something, just even if it's a profit taking event. But these markets, given the levels we're at, it could be fast and violent, these corrections.
And then on hogs, what did we see out there today?
Hogs were green on the day. They ended the day, June hogs, the June contract was $1.20 higher. July was 70 cents higher, and the back months were 30 to 50 higher. The hog market, from a technical perspective, it continued to find support here over the last week after this little correction that we've had lately. It continued finding support around the 200-day moving average for the June contract, which is down in that 96 area. And here hogs are working back up to the $1 area. Hogs, not that it's an immediate impact for the hog market on the export side of things, but I mean, for all of the markets, but especially hogs, it was good to see the U.S. and China agree to lower the tariffs, and that supported obviously all of the markets yesterday short term. But the hog market's definitely finding some more carryover support from that, the tariffs being lowered, and hogs should stay extremely well supported. And for that June contract, I continue to think that 200-day, if you are to see the June contract close below the 200-day, I would expect more selling. But I think for right now, hogs remain in good shape.
All right. Well, Ross, if folks want to talk about some of the market strategies they should be looking at or other aspects of their marketing, what's the best way for them to get in touch with agmarket.net?
You can reach me at our office here in Anthony. Our number is 712-373-3276, or you can visit agmarket.net to find any of the ag market brokers.
All right, Ross, we thank you so much for the insight. We'll talk to you again real soon.
Hey, thanks for having me, guys.
That again was Ross Baldwin of agmarket.net. Let's take a look at the closing numbers on the Iowa Agribusiness Radio Network market screen. You can find it online at iowaagnet.com. At the close, July corn down 5.5 at 442.5. Soybeans up 1 1/4 at 1072.5. Soy meal down $4.80 at 293.30. Soy oil $1.56 higher at 51.48. Chicago wheat up 2 cents at 517.25. Kansas wheat up 3 3/4 at 511 3/4. July Minneapolis wheat down 3 1/4 at 580 3/4, and oats down 4 cents at 342. On the Merc live cattle down 50 cents at 216.32. Feeders down 27 cents at 302.82. Lean hogs up $1.20 at 99.50. Pork cutouts unchanged at 104.12, and Class 3 milk up 3 cents at 18.48. And that's been a check of our closing market recap, and that brings us to the end of today's show. You can find all our content online at iowaagnet.com, as well as follow us on Facebook, X, and here on our YouTube channel. Don't forget to subscribe and hit the bell icon so you're notified each time we put out a new video project. Also, don't forget about the free 3 times daily market podcast with analysis sent free of charge to your mobile device through the Iowa Agribusiness Radio Network Market Podcast. You can find them on Amazon, Apple, Spotify, and Podbean. From the iAron Studios in Des Moines, I'm Dustin Huffman. For Andy Peterson, Riley Smith, and Mark Magnuson, we thank you for watching. This has been Ag Matters PM.